Hey guys, Rajiv here from Financial Hub India. So today I'll talk about an important query from you guys. That is how to deal with the conflict of different trends as well as different key levels. Conflict of different trends and different key levels in the sense when let me just draw it to make you understand what I'm talking about. Let's say we have an okay. Let me make it this way. Let's say we have an uptrend in a weekly chart. All right, this is strongly trending up, right? And the price is now coming back down on a retracement, and we have the flip support right over here, right? So since the trend is up, if we don't get a breakout trade towards upside and you're looking for the pullback trades, then we'll be waiting for the market to come down to this flip support to go ahead with the buy trade, right? That's how we see a trend, and that's how generally we trade a pullback on a trend. Now, what if you see, let me change the color. Okay. What if you are not a weekly trader or you are not a long-term trader, you are just a swing trader and you are just looking at the 15 minutes or maybe an hourly at the max, an hourly chart. And for you, you see strongly trending down swings in here. And this is how it attacked the key level of support here, right? So even though you are an hourly trader, hourly chart or short-term chart traders for the swing positionals or maybe intraday kind of thing, still, I mean, you'll have to take care of you'll have to keep a note on the weekly key levels as well. The lines will have to be on your chart. Like this is Tata Steel, right? In Tata Steel, if you see here, this is an hourly time frame chart you're following here. So even though it's an hourly time frame chart, we have these two lines drawn here, which are weekly time frame charts. And these two lines you see here, these are the hourly time frame charts, which is coming directly from here. The support, resistance, resistance, and right now on the resistance again, right? So there is a conflict, isn't it? So I mean, for you, you can say there can be a question that you can say that, okay, well, what about how to deal with this situation that the hourly time frame is strongly trending down, and the weekly time frame chart, the longer time frame chart, is strongly trending up. So there is a conflict, isn't it? So today we'll be talking about that conflict, that how to deal with that. Now, where the conflict is happening, till the time price was not reaching this support level, the conflict was not there, isn't it? Because when this was not there, wait a minute. When this was not there, the weekly time frame trader, the long-term traders, or maybe a person looking for a short-term trade on the long-term, even that's what happens, right? Even if I'm a short-term trader, for a short-term swing trader, still I want to buy it somewhere where the long-term key levels are. That can also happen. So in no way, from here to here, this area is not disturbing. This area had no conflict, because in any way the long-term traders, who is following the weekly chart, he's also waiting for a sell-off up to this support level, and following the lower time frame charts, you can easily capture the sell-off, following the trends and all, right? So there is no conflict between here to here, but the conflict starts when this strongly moving downtrend in the lower time frame chart reaches to the strongly moving uptrend support level. All right. Now, whether to go ahead with the short-term trend or whether we'll move ahead with the long-term uptrend, how to figure out their thing in here. And the same scenario is really happening in the Tata Steel chart right now here. So you see, this is, we have a resistance, and if you see the hourly time frame, this is quite strongly down. The trend is quite a strongly downtrend, isn't it? You see? So this was a support breakdown over here, and price moving up and falling from the flip resistance, right? And again, there was a breakdown below the last lower high. So the lower high formations are intact, and every time the price is really responding, and on the flip resistance level again, but this time it didn't work out right in here, yeah. And on that area around, we have this key level of support here. So how to deal with it? Now, whether this trend is not yet broken, this trend is still intact. Now, whether to continue with the hourly time frame downtrend, or considering a bounce back from the flip from the weekly support level, false break and a bounce back from there, we should not follow the hourly time frame chart anymore. How to go ahead with this? Let me just show you how the hourly time frame key level I've drawn, so that the matter will be clear for you. Display, okay, hourly here. From here, this is the, you see a big bounce from there. So that's a key level, and we are right now on the key level in there. Now, even though the weekly looks a bit weaker in terms of the uptrend momentum here, because the uptrend momentum really paused. It was moving, and it paused really in here. So let me just go ahead with the monthly time frame. In a monthly time frame, things looks yet better. Resistance, and you see the false break, price moving back up. So it is still in line somehow, the upward momentum. So in the next video for the members, for the advanced course members, I'll be talking about, I'll be addressing this issue, that how to deal with this. And also, I think I had one more thing to discuss with the members. That is, let me, okay, that was about the key level adjustment. All right, so right now we have these two key levels, and this low. You see, this is also an important area, right? So we have these two key levels from the support, from the weekly support, and we have this one as a hourly time frame bounce. We don't need to take this bounce because this is not a major one, but we need to take this bounce as well, isn't it? This was a big bounce again, right? So if we are following, in case we are following the hourly time frame trend, then we should be looking for short in this flip resistance, right? Somewhere this flip resistance. Now, if you're going for short in this flip resistance, then what should be our target? This one, or this one, or this one, or this one? What should be our target? How to do the targeting part in that case? Because again, if you're targeting this one or this one, you're then conflicting with these two support zone here. So there is a big confusion here, right? That's second issue we'll be talking about. And thirdly, we'll be talking about the how to capture the reversal. In anyways, I mean, let that be a different topic for another video. In that case, let us just talk about these two things: the conflict of the trends and the conflict of the key levels here. All right, I'll see you guys on the next video with the detailed summary and answers on this. Till then, take care.